please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
News from MCX. Normal trading will resume at 4:11. There's some glitches with that exchange today. Some updates coming in on all those who are trading on the MCX platform. Okay, so Anish, just to quickly come back on the note that you put out, the indication from what I gathered was that you're seeing certain signs of green shoots, certain trends where growth momentum is sustaining. So how can one play on this recovery? What pockets of the recovery are you looking at picking out?
Consumption sector is one of those areas where you are seeing good growth coming up. Consumption has been, divided into a few categories. One is the consumer discretionary, where probably you have a lot of unorganized sector in place, and because of what has happened in terms of the changes in the tax structures and the way it is, we are not seeing that kind of move between the unorganized to organized. So that sector in the consumption space is not doing well, but the staples is doing extremely well on the back of rural growth. We are also seeing very good growth come in the two-wheelers and the car industry. And the commercial vehicle industry, though not consumer-led, is seeing a continued cyclical recovery. So all these pockets are seeing exceedingly good recovery. We are also seeing recovery in terms of volumes in the metal space locally, but given the fact that it is driven more by the global headwinds, probably the stocks are not doing that well. But we are seeing a good momentum in terms of a steel demand or an aluminum demand from the Indian markets. So that is typically what we are seeing as pockets of growth.
I just want to point out Adani Power is now up 20%. I'm looking at futures, single stock futures, but it's up 20%. So that is a big one. And it's seen that spike over the last couple of minutes. We can maybe put that graphic up again. I mean, the data on the Mundra UMPP was very specific to Adani Power, where about 3/4 of the Mundra UMPP capacity is now operational as of 18th of June. It was hardly anything. I mean, 1,300 odd megawatt in mid-May. So maybe that it is that, maybe it is something else. But the Adani Enterprises is up about 8.25%. Adani Ports isn't really participating, and that was true earlier as well. So what else? I mean, IDBI is picked up a little bit more. It's up 7.5%. All futures. Godrej Consumer Products is up 5%. TCS is up 4.7%. Tata Elxsi is up 3 1/3. MCX is up about 3%. And then you go to Divi's Laboratories and Bajaj Auto, which are in the 2.5%, 3% range. Big losers, Bank of India, UPL, Steel Authority, Coal India, etc. So those are names coming in. In the break, Amrish, you were talking about Setco automobiles, right? It's seeing a very large move today. It's a clutch manufacturer.
Clutch manufacturer, basically, like it is the third largest clutch manufacturer in the world. And domestically, about 85% of the market of medium and heavy commercial vehicles is with them. So, which actually means 100% of Tata, 100% of Bharat Benz and 100% of Eicher is supplied by them, and about, I think, 65% of Ashok Leyland. So, looking at this strong market which they have, plus the replacement market where their margins should move up because of GST now, there's less competition from the other players. I think, this company should do about 1,000 crores of turnover by FY20. Currently, I mean, FY18 was closer to about 600.
Do they have any pricing though? I mean, you're dealing with very large manufacturers, right? I mean, they usually get squeezed out.
Being a major supplier, like margins are decent. I mean, like I won't say that the margins are great. Margins are, really good as far as the replacement market is concerned. But here, being the major supplier, they do have a say. If they were one of the suppliers, if there are, say, 4 suppliers to Tatas, then possibly they could have got squeezed out. But here, they are the dominant ones. And looking at the sort of, the way the revenue will move up over the next 2 years, to 1,000 crores. And again, looking at the EPS of about 5.5, which I see for FY19, I think at 48 is the steal. I mean, in fact, although it's moved up today from 42, 43 levels, I see a level of about 63, 64 for the stock.
Okay. Anish, before we let you go, your thoughts on the mid-cap market now. Is the worst of the fall over? And which side of the debate would you be on? I mean, there's a large section of the market that's saying stick to what's known, what's discovered, even if it's high valuations, and don't fish around for, beaten down ideas or new ideas for that matter.
I think that's perfectly what one would say, because we go after this hope trade, and hope trade is now not panning itself out. So unless and until one is very sure about the growth trajectory, and that growth trajectory should be imminent rather than a year down the line, those kind of stocks should be avoided. And typically what we have seen is that those stocks which are trading now near to its 52-week highs rather than having corrected substantially are the ones where probably you would want to look at, and those are the ones where you would say that the growth momentum is intact, and as a result of that you need to be in those stocks. It's perfectly in line with that trend. So wherever you are seeing earnings beat, or whether you are seeing earnings remaining robust, those stocks are continuing to do well and continuing to outperform. So I think that has been the character of the markets in the last 6 to 12 months, and that will remain the character of the market, I think, in the near future as well.
All right, Anish, appreciate you joining us on the show today. Thanks very much for your time. Good talking to you. That's the view from IDFC Securities. We'll take a quick break. Back with the market close in a moment.
See, it all depends on what sort of follow-through there is globally and what kind of escalation there is on the trade war. But by the close, IT has given up 120 points from the highs, the IT index. Nifty is closing towards lower end of the range. Basically, if there is going to be uncertainty, we are not going up. This should be clear. Say overnight something happens and, the trade war concerns go to the background, like it's truce for next 1 month or something. Only then we start moving forward. But there's a good chance that this is that kind of zone from where the market has turned earlier. Because, 11,050, 11,100, around this zone, if there's trouble, long positions which would much rather take their profits than hang around and see what happens.
Ashwini, so in terms of, just 2 minutes to go for close, what would you just reiterate the strategy?
Do not carry positions overnight. I think today was indecisive, skewed by TCS, etc. I think a more cleaner trend will be visible tomorrow. If you see the rest of the market, it hasn't done too great.
Okay, remarkably even keel kind of closing, right?
Yeah.
There was a 1 point change at one point, and I was wondering whether we'll close with a 1 point change. Thankfully, it is 5. 10,942 is what we have on the Nifty. Just recapping the day's sort of trade in terms of large cap, it's up on your screen. So TCS by far, I mean, there's TCS on one side and everybody else on the other, and that responsible for the Nifty closing flat. You take TCS away and suddenly there is a bit of a gash on the Nifty, 20-30 odd point type of gash, which could be visible on the Nifty. I mean, if you make TCS flat and keep everything else as it is. Okay, Nifty Junior, small cap index, mid cap index are up on your screen as well as of now. Bharti Infratel, Bajaj Auto, HUL, Reliance, Infosys, HCL Tech and Kotak Bank. These are the 1% plus gainers. So we have what, 8 1% plus gainers on the Nifty, and Coal India, Hindalco, Tata Motors, Bank of Baroda, Tata Steel, Gas Authority, State Bank, I mean, are the 2% plus type of losers, and we got about 8 or 9 of those as well. Market breadth about 1.7 lower to about 1 higher, so that's 1320, 1330 stocks lower, about 790 stocks which end the day higher. 5 point change Nifty. Mid caps and small caps, Ravi.
Mid caps, well, they decided to take a bit of a breather today. So you've had a fair amount of selling on a lot of the PSU banks, on a lot of metal stocks, of course, beyond the Nifty 50 as well. So something like a sale, 5% down. We've seen weakness on JSPL, about 3.5%, 4% down on that one. Banks, as I've been saying, Bank of India is down about 5%, Andhra Bank 4%, Union Bank 3.5%, 4%. So some of these PSU names haven't really worked out. Count in OBC in that list as well. Oriental Bank of Commerce about 4% lower. on that stock. Nalco from the metal space also weak, 3.5% on its way down. Jet Airways has lost 3.5%. India Cement is down about 3%. Cadila has lost 3%. So these are some of the noticeable mid-cap losers on the screen. United Spirits has had a bit of a downer of a day, about 3% lower on that one stock as well. Now, this is pretty much, some of the key losers as they stack up. By the way, Sterlite Technologies, didn't mention this stock. Remember the big rally after the Jio announcement. Today, a lot of that profit came off, about 6% down on that stock as well. Thirumalai Chemicals was on a tear yesterday. Again, today a more tempering, sobering day for a stock like Thirumalai, about 6% lower on that one. Now, let me talk about some of the outliers, some of the gainers. Setco Automotive, which is, of course, Amrish's pick, that stock did very well today, 13% up on Setco Automotive. Good day for some of the consumer names. So Godrej Consumer, 6% on the higher side. We've seen good gains on Jubilant Foodworks continuing. That stock hit another 52-week high today, or a 1% up move actually. Lemon Tree, 4% higher, so that wasn't bad. Some of the mid-cap IT plays like Tata Elxsi worked out quite well. About a 4% up move on Tata Elxsi. Let's pull up NIIT Tech and some of the other names. Hexaware, for instance, was down. NIIT was up about 1%. So more mixed trends on the mid-cap IT pack today. FirstSource also, when I checked last, FirstSource was also slightly lower. So very mixed trends coming in on mid-cap IT. Divi's has managed about a 3% up move. Crompton Consumers has managed a bit of an uptick for itself. And let's also talk about the Adani group of stocks, because that's where a lot of headlines are coming in. Adani Enterprises coming up on top with an 8.5% up move, and Adani Power was the other big mover. We're talking double-digit gains on Adani Power. Look at that stock, about an 18% up move on a day like today. But one would have to say, Prashant, I think the day squarely belonged to one stock, and that is TCS.
I mean, that was clear early on, Surabhi, right?
Yeah.
And, actually, it was clear, at least I guess, to a few yesterday when the numbers came out, and then the commentary came in this morning, and markets open, and it never really did look back. So it's a pretty, very strong close as far as the TCS stock goes. Mitesh, I mean, your thoughts, as we pretty indecisive as Ashwini said, but what would your thoughts be when we come back tomorrow?
I think pretty sideways, See, I would not really worry about it given the fact that we have ridden a rally and we have not really given up the gains big time. Yes, there has been some skewness in the index, and no doubt that TCS and Reliance were majorly responsible. But I do expect these stocks to anyways outperform for the coming few days, and Reliance should be one of the leaders of this up move. So I think in that sense, I'm pretty okay. The banking structure also doesn't look very weak, though I think, IndusInd Bank is now slightly showing signs of tiredness. But overall, I think that the market should have enough strength to go up. I think let it catch its breath after the 2 days of good rally and maybe consolidate for next 2-3 days. But I think as long as we are not going below 10,890, I would be pretty positive.
Actually, just a last question. I don't know even whether this is even worth thinking of for trade tomorrow at all. I mean, the way the metals pack is closed down today, if we are going to see more sluggishness overnight, more trade talk, tariff talk, whatever overnight, would these be short candidates for you tomorrow?
See, they were anyways going down. Now, this is an extra straw on the camel's back, and chances are exporter-led stocks, still this news is around, will not go up. Chances are will go down. Now, the issue here is that we are at a key turning point, like 99.50, 10,000 was one. This is another. And it has the potential of being, the top. So, that people should guard against, that maybe one day we held on, 2 days we held on, but if we are not able to make progress, then, the bull will start to get tired.
Okay. All right, gentlemen. Then we'll wind it up on that note. Thank you very much for being with us and taking us through the market close today. Welcome back. IT major TCS has delivered a strong set of numbers for the first quarter. Earlier today, my colleague Reema Tendulkar caught up with V. Ramakrishnan, CFO, and Joyendra Mukherjee, Executive VP and Head of Global HR, as well as K. Karthivasan, President of the BFSI vertical of the company, to get a sense of what the street can expect in the near future and whether double-digit margin growth is a possibility.
I think you are well poised to get to that from various aspects. Definitely BFSI and retail, where we were seeing quite a bit of muted growth in the last couple of years. We are seeing that coming back. and also all the other verticals are doing well.
Priti, let me come to you. The key positive is the turnaround in the BFSI vertical. A, is it sustainable? And B, if you could tell us what has changed in the environment.
See, we've been messaging since last quarter that our European banks and European insurance organizations are doing very well. And we've been having a softness only in North America. And even in North America, what we saw is many of the banks were focused more internally on their workforce and workplace reimagination and transformation. We believe that has sort of ended, and banks are launching new programs. And like Ramki mentioned, our Business 4.0 initiative is resonating very well with our customers. They see this as a differentiator for them in launching their transformation program. We believe that's the primary change that's driving this growth for us.
So particularly for the North American banks, which was the problem area, say for TCS, is there an industry-wide demand uptake? Have clients started spending more? Or is this specific to TCS and TCS has won some market share?
We are definitely gaining market share. I don't know whether to say that it's industry specific, so everyone is going to gain. That's too early, and as we said yesterday, it's not for us to comment on whether everybody is gaining market share.
So if you could give us a number of the H1B applications, how much lower is it compared to last year, and if that can be a margin tailwind?
From an H1B point of view, I think we have said before also that our total number of applications that we have been doing this year is same as what we did last year.
Okay.
And last year what we did was almost 1/3 of what we did the prior year. So we have been reducing our number of H1B applications.
Coming back to the banking vertical, would you say this is only the start of the turnaround for the BFSI vertical? And despite it showing good growth in Q1, on a year-on-year basis, it's still a growth of 4.1%, which is much lower than the company average. For the full year, do you expect BFSI to grow in line with the company average?
It could be quite in line with the company average.
Okay. So that is because last year I think BFSI just had a growth of 3% for the full year. So
we are quite optimistic about this year.
Priti, $1.6 billion is the deal won in this in your vertical.
Correct.
In Q1. Since BFSI growth is a 7-quarter high, would you say that the deal wins too are perhaps close to being a 7-8 quarter high, a 2-year high?
It is actually ticking up. We are seeing strong deal wins, both BFSI and the platform deals together. We are seeing actually one of the highest we ever been.
Okay, so that was a very confident sounding TCS management earlier in the day. Let's now move on to CNBC TV18 exclusive. My colleague Jude Sanith caught up with Rohit Suri, President and MD of Jaguar Land Rover India, who outlines his concerns around taxation and also says that he is very happy with the sales growth seen despite the customs duty hike.
We are extremely happy about it, and we are really thankful to our customers. We are very, humbled by the fact that we see a growing patronage for our cars. But I think this has happened mainly on the strength of the products and the brands. Most of our products, which includes the Jaguar XE, the Jaguar XF, the Jaguar F-Pace, the Discovery Sport, and the Range Rover Evoque, are doing extremely well. So individually these products are doing well, and that is what has helped us to achieve this kind of growth in the Indian market.
And going forward, what kind of growth projections are you looking forward to? Because this, of course, is the challenging year. You will encounter more months when the new customs duty kicks in. What is your projection? High double digits, you think, going forward?
Yes, of course. Our endeavor will be to maintain this growth momentum, and we will not leave any stone unturned to try and get to that level. But of course, I can't absolutely forecast it to the last digit, but we will be looking at high double digit again this year.
All right. Very interestingly, a few months ago, you said you were considering suspension or stoppage of local assembly plans, especially in the hike of the customs duty surrounding CKD kits. Has a decision been taken yet surrounding that, and if yes, when will you come around to that?
So we have clearly stated that we are very concerned with the high taxation which exists in India, not only customs duty but also on account of GST, because we feel that this is constraining and constricting the market, the overall market. Yeah. So the overall market in India is just about, for these cars, in the range of about 41 to 45,000 odd units, which is just a percentage of the overall passenger car market, which is almost about 3 million. Okay. So what these high taxation is doing is it is not allowing these segments to grow, and therefore that is of concern to us, because with the launch of a new dealership like this, we employ almost 75 to 100 people, starting from ordinary guards, at the front door. We have receptionists, we have salespeople, we have technicians, we have logistics people. So if the market grows, we'll be able to open up more such dealerships, and you can imagine employing hundreds of, create more job opportunity for a whole lot of people. So I think overall this is still concerning to us. We're of course growing on the strength of the popularity of our products and our iconic brands. But we continue to be concerned about the high taxation which is still existing in the market.
Okay, well, on that note, we are going to take a very quick break. On the other side, all the commodity market action coming up with Manisha Gupta. Welcome back, and let's chat commodities. This is one sector which actually has started in the red and continues to be in the red, not just in the Asian sector, but in European markets as well now. And with the kind of fundamentals that we are looking at, there hardly seems a chance that you would see a buying coming in. So nearly a percentage point down on the US crude, and the Brent crude, of course, seems to have declined much harder. That is because the Libyan output, which has been off, some of those export terminals seem to be coming back on. The pressure, of course, is because of the Trump tariff threats on additional Chinese imports. That has been one reason that has seen a complete sell-off happen in case of commodities, not just crude, but the industrial metals as well. But that's an important one, because the Libya outage is something that the markets were looking at premium from, but with Libya announcing reopening of some export terminals has taken that premium off, and that's the reason you have seen the Brent prices decline more than 2% on your screens. Azleen Ahmad, editor at Argus Media, now joins us to talk more about that. Azleen, hi. It has been some sell-off that we've seen in commodities, but crude oil, with the kind of decline that we have seen come in for Brent, what would you give that to, and do you see further declines from here?
Well, I think you're right that the main factor that pushed Brent prices down today was the lifting of the force majeure at the 4 Libyan eastern ports. I mean, before this, Libya had said that the disruptions earlier had reduced production by about 850,000 barrels per day, which is quite huge. So the assumption now is that this production should slowly return to normal. So I think that's been a big factor that has pushed Brent prices down. And I think that also there's been some news that the U.S. may consider some Iran sanctions waivers to what they say is a handful of countries. So we don't know what details of that and how things, but I think that in a way that maybe has maybe given some appease the market a little bit. Maybe U.S. will not push for a complete halt in Iran exports as they had planned earlier. So I think this seems to be the two sort of like big factors that put pressure on the ice Brent prices today.
But, yes, you rightly said Iran has been yet another factor with the U.S. stance softening on Iran sanctions there. So with the kind of fundamentals that we are working with right now, would you say that a near-term high for the crude oil prices perhaps has been done? Because when we are looking at the EIA data or the forecast for U.S. output, that also seems to be pretty on the higher side up till 2019. How have you seen those numbers?
Well, I think that, okay, if you're looking at the very short term, I think that the market is not yet super tight because, as I said, this is assuming that the Libyan production will resume in the next week or so quite nicely. And the Iran sanctions and the Iran export hasn't really hit yet. And we've had a lot of news that Saudi Arabia is going to increase its production this month. So at this point, there is still more supply than demand. So we're not yet in a market that is extremely tight. But the one thing that I think will still keep prices a bit high is the U.S. weekly stocks data, which is due out today, because there is the possibility that we could see another drawdown in the Cushing stocks. Because refiners in the U.S. are looking for alternatives to Syncrude. So maybe that could still put some strength into prices and not prevent prices from falling sharply, at least in the short term.
Azleen, how big is the US-China trade concerns really? Because that led to a complete sell-off in the industrial metal space today. Is that one of the factors that the crude oil prices also would be looking at?
Probably. I mean, I think so. But the thing is, we're still unclear on whether the tariffs, whether China will actually go ahead and implement the tariff on its U.S. crude imports. If it does happen, I mean, I think it's going to be quite significant. And right now, already, some of the China's refiners have cut back on their U.S. crude buying because basically it's uncertain. They're just not sure what is going to happen. So I think that it's more of a wait and see to gauge if those second tranche of tariffs will be implemented for China. But if it does go through, particularly the U.S. crude imports into China, I think that it's going to have a big impact in putting pressure down on oil prices.
So what you are saying is that the first tranche, of course, is done and the markets weren't anticipating a second round of trade tariffs so soon. What are the markets reading into right now? If the China does retaliate, does respond to this yet again, what kind of a dent then are we seeing into the world economies and demand, especially when it comes for commodities?
I don't know. I mean, at this point, it seems, I think some of the analysts and some people, market watchers, do feel that looking at what's happened in the last week, that there is a great possibility that China will implement more tariffs. And I think that it's going to be a very negative impact, but I think it's going to be very hard for us at this point to gauge how negative it is. But I don't think there's any doubt that it will have a negative impact in terms of the demand, because China is still the growth market. I mean, I don't think anyone can deny that China is still the growth market.
Point taken, Azleen. We'll let you go at that. Thank you so much for joining us. That is a view then coming in from Argus Media. A couple of things to keep an eye on. One, of course, is if China retaliates yet again to the second round of trade tariffs from US, would be very negative for the markets going forward. And the other thing, of course, is the crude prices also losing some premium on hopes that US will not be so hard on pushing a complete ban of Iran imports. So those are the couple of things that clearly have pulled the crude oil prices down on your screen. So 2% down and more for the Brent, and 77 just about holding for that one. Fayaz Udani of Kotak Commodities also is with us in the studios now to discuss strategies there. Fayaz, hi, good to have you. Let's start with crude oil first. And we started quite on a lackluster note, and with the kind of declines that we have seen come in for this before the US session starts, or as we get into a new time zone here, how are you looking to trade?
Well, I think right now the markets have sidelined the fundamentals of all the international commodity. It is majorly the fear factor which is playing out in the international market, and the funds are clearly liquidating their position. So from that perspective, we feel that crude oil will correct. No doubt the long-term fundamentals are bullish and intact for crude oil, but even the up rally which we have seen lately seems to be exhausted in last couple of trading sessions. So we might see a profit booking coming in. I think $72 basis WTI is a good support level to watch out for. Till the point of time markets are holding that, we may say that the near-term trend is bullish. However, a correction is due in the near term. To talk about the domestic market, we recommend to go short on the MCX active contract at around 5,110 for the target of 5,020 with a stop loss of around 5,180.
Since you mentioned MCX and we have seen a couple of technical glitches come in from the exchange today, how has been an experience then for the participants, members, brokerages, etc.? Because given that the day today has been very volatile and you would have wanted to be in the market, but with the glitches a couple of hours actually during the day, how has that impacted?
Well, I think today is not the day when any traders would have anticipated such kind of glitches, but it is unavoidable. We can't do much about it. The good part is that it is actually coming in the earlier hours and not in the live hours of US market. So that is a good part to look for. And I think hopefully the exchange has intimated that they will start the trading very soon. So we hope for the best.
Well, yes, that is something to look out for. And the MCX stock in the meanwhile, of course, has been quite volatile. We did see MCX stock gain up 5% in the first half of the day. But since then, of course, there has been some decline. The last I saw it was a couple of percentage points still on the higher side. But Twice technical glitches is what we have seen for that stock. Still 3% up. It has been doing quite well, holding 793 on your screens. Fayaz, let's also talk about the metal space because that clearly has had a pounding. We have seen 4 to 6% of decline for many of those metals in Shanghai. It is down quite considerably on MCX as well. What is looking most vulnerable to you? Because we've seen zinc and nickel actually decline the most.
Well, I think across the base metal complex, we have seen sell-off. To talk about the fundamental data, lately all the data which has come from China has not been very good, be the PMI manufacturing index or the asset numbers which we have seen lately. So the broad outlook from a fundamental perspective seems to be bearish on base metals, with of course this US-China thing going on, which is again negative for the demand of base metal. From the near-term perspective, or rather to pick up one single commodity, I think zinc looks to be more bearish compared to other commodities because of the rising stock on LME, and in fact the supply side to be expected to go up in the second half of the year. So if I have to pick up, I'll pick up zinc from a near-term perspective to go short. Saying that the markets are really oversold, so I would rather wait for a bounce to go short. To talk about the active contract, I think 179 on MCX is a good level to go short. The target would be around 174. Stop loss for this strategy is recommended at around 181.
Clearly, as anticipated, there are no buy calls in the metal space even right now. Thank you so much, Fayaz, for coming by and giving us your opinion and strategies. With that, that's all the time that we have on this edition of Closing Bell. But after the bell, we'll take all the action forward.